What is going on, you guys? Just give it just a little bit. I am doing this kind of like ad hoc. Ooh, little echo. Sorry. See how they're popping in. Cool. What's happening? Oh, look at you guys. Super fast. Nice. Give everybody just a minute. What's up, man? What is up? Nick is here in the house as always. Frazier, what's up? Cool. You guys rock. Hopping in somewhat short notice. I don't know if it's short notice or not. I don't know. So anyways, I'm gonna start while people are still kind of we are here, man. Yep. I have been kind of like MIA. If you guys don't know, I got a little sick right now. I made it into the office for the first time in a while, so hopefully, aloha, what's up, Brad, what's going on? Peter is in. You guys rock. Trying to do this little multi-stream. Tommy, what's up, Tommy? You guys are awesome. Cool. Yeah, hugs and kisses. Love that. Yeah, if you guys, as you guys comment, these things kind of like pop up on this new software. So giving the guys a little bit, see if anybody's going to hop in with me. Probably not. We'll see. But anyways, as we get going here, if you're new to the broadcast or if you're new to the show, we're doing this on YouTube and I think Twitch now. And I think this went out to, I think this actually went out to Twitter. I don't know how that's going to work, but we'll see. Anyways, but I do this every single Monday. It's not new. If you're a trader or if you're in our group or groups, any of the above, you guys know we always approach trading like a business. So, a lot of people tend to look at trading like a hobby, which is fine as long as it's fun. Hobbies typically cost lots of money and take lots of your time. So if you want to actually do this for real, you got to approach it like a business. And that's what we do here every single Monday. Oh wow, okay, cool, interesting. Looks like we're getting a little bit of a pump today right now. And just if you're not sure what's going on in the market, I think today right now, Mondays we typically get a little bit of a follow through from the weekend. We'll see. Tomorrow though, I'm just going to tell you right now, tomorrow's going to be the biggest day of the week, believe it or not. It's not typically what you would think of as an important economic day. But we do get something called PPI or Producer Price Index. And if you guys remember, that was the one number that really set the market on fire this last time for this inflation thing, right? So that's we'll get into that in a little bit. But again, what we're going to do today is just kind of go over some of the highlights from last week. Probably not going to go too much into the things that everybody knows about, like the FTX debacle and things like that. I don't know that that's going to be such a big deal since everybody's already covered it. But a couple of the other things and what to watch out for this coming week. So before I get into that, I got to point out that we are an options trading group. And so if you are looking into options, please call 1-888-OPTIONS and get a copy of Characteristics and Risks of Standardized Options before you start trading. I'm supposed to read this other thing where it says, I need to point out that you should carefully consider whether trading is suitable for you, considering your circumstances, knowledge, and financial resource, as you may lose all or more of your initial investment. So be careful and cautious. That's all I'm saying, right? So really quick recap. So last week we had, is this recorded? Yes, it is, right? Chris is asking, is it recorded? It's always recorded. YouTube, just search Paper Gains. It's always there. We do it live every single Monday. Unless the markets are closed on Monday. That's pretty much the only time we don't do it. So last week we started this thing called midterm elections, right? And so that, if you're not familiar with that, that's actually, it's not necessarily market moving, but it's like this mark in the market. And the market is seasonal, if you guys didn't know. So November, December are typically pretty good months. We went through these last few weeks. September is typically the bloodiest month of the year. And then it kind of lightens up typically in October. So this year, every year is a little bit different. We don't really know, what it's going to look like. This year we do have, I guess it's like, we had a little funky stuff, right? So we have a lot of inflation talk going on. We had, CPI coming at the end of last week, which we will go through here. And if you guys don't remember, I was always talking, look at the month over month number. So yes, well, most of your economic calendars will point out the year over year number being like the most important one. To me, it's the month over month. So month over month numbers, that's what's actually going to move the year over year rates. And really the biggest thing was this core month over month inflation number for October. So what's going on right now? So last month, September, right? September results, we got 0.6 move higher. And then this last one, we got 0.3%. And so what you take from that really is like, well, what has the government been doing up until now, right? We've obviously been doing the rate hikes, and why are they doing that? um, too funny, Nick. And what effect is that having on the market? And until last month, or until this last CPI, report, and it's still hard to say right now, the market's been like, well, it hasn't actually really had a huge effect on inflation, and they're not wrong, right? So, I think coming into this, couple of things. So coming into these last 2 weeks, we had an FOMC meeting where we got this last 75 basis point hike, and there was clearly a lot of hopes around a 50 basis point hike, which we did not get, right? And the second that there were two things. There was a notes release before those FOMC meeting, before the FOMC address from Powell. That did look a little bit dovish meaning like they want to lower rates. And I think that turned out to be more of like the opposition's argument. And when Powell came up to the stand, he was very quick to kind of smash that entire idea that we are not even close to a pivot or a pause. And we are going to stay, quote unquote, data dependent, or and I did hear a lot of the inflation is transitory, commentary coming out yet again. Kind of funny. But so what happened? So we got the midterm elections, right? So if the government comes out, so we're electing Senate and House officials, right? If the government is in a stalemate, they can't really continue to spend, which is good for the market, right? If they're all Democrat, across the board, then yeah, we're going to be in a lot of trouble in terms of overspending potentially. That's the fear of the market. I'm not saying one way or the other. And then this inflation rate came in and just knocked the socks off the bears, right? Like massive short squeeze came in, and it's kind of continuing today, right? So right now I have this video is really going to be about kind of like, what is this thing called the Santa Claus rally? And so as we walk into the back half of the year and what a seasonal market looks like, technically, I'll tell you this, anybody that's been around in the markets and is looking at this and saying Santa Claus rally, what are you talking about? It's way early for that. Technically, yes, right? So typically the Santa Claus rally is defined as like the last 5 days of the year. But for me and my trading and what I've noticed over the years is that it really starts just before Black Friday. And so I got a couple slides on that, but just before Black Friday, what starts happening, right? People begin to spend again. Is that going to be good or bad for inflation, though? This time around, that's kind of what makes it a little bit different. So we'll take a look at that for sure. Consumer sentiment did come in slightly lower than prior and than expected. I do believe I'd have to pull up one of these. No, we barely got a stutter step on Friday. And man, I'm just looking at these charts. That's CPI on Thursday or Tuesday. Was it Tuesday? So today, Monday, Friday, Thursday. Oh, this is supposed to be Thursday. Sorry. That thing just knocked the socks off of the market. That was out of control. So anyways, moving forward. So what's kind of like the biggest recaps of the week? So last week, clearly there were a ton of bears out there, right? And so Nick, what is he saying? SQQ 600 million inflows this morning. Yeah, so we're coming up to a super critical level on SPY, right on that 4,000 mark. Can we break it? Probably. There's a ton of talk around this, 410, 415 level, or really, as we know, the 420, right? Like at that level, that's when it's like, okay, it's no longer what's a bear market. What are you talking about? Which is, it's possible, very possible. But last week, yeah, it was a massive week, right? So probably one of the best days I've seen if not the best day this year on the Qs, coming out of that CPI print too. So that was a massive one. Personally, I definitely had some puts on that I was like, quickly exit. And luckily I wasn't, burned too bad on a lot of those. Obviously should have taken profit a little bit earlier, but it happens. Reading some of the articles over the weekend, I think really what was, what's apparent right now is that there's still a ton of hope in the market about this Fed slowing the rate for December, right? And we'll take a look at the CBOE data points later on and see what the market's pricing in today to see where we can expect to go for the following week. There was a article out on Walmart again saying, hey, Walmart's trying to push around producers and suppliers, saying we're not going to pay up for more for our goods. We'll see how that affects like Target, and the other retailers. And then we have, actually, I didn't put it up here. We have Home Depot and Lowe's reporting this week too. So if you guys aren't aware, home builders are probably one of the sectors that have been hit the hardest, one of the hardest this year. And if interest rates are peaking, then that might be a sign to maybe stick our toes in the water in some home builders. We can take a look at Home Depot and Lowe's for sure reporting this week. That'll be probably one of the bigger ones, and that'll be the first tell really for us moving forward. I think Biden was meeting with Xi this morning. Also, China's been on a tear lately, so we'll see how that goes. That's going to have more to do with, I don't know if you guys saw, there was an AMD upgrade this morning. A little bit more to do with what our relationships are going to look like over there in terms of semiconductors and our policies around that right now. And so we'll take a look at that. Funny one. There was I haven't looked at Lilly today. I probably should. I don't know if anybody has, but there was a fake tweet, more Elon shenanigans. Oh, it hasn't. Yeah, it looks like kind of recovered a little bit. Not much though. Eli Lilly had a fake tweet go out from one of these Twitter blue, quote unquote, like verified accounts that took out quite a bit of their market cap last week. So I think there's some shenanigans going on around that too. So that said, here we go. We can kind of move into this. Actually, let me do this. Let me pull up a quick. So CBOE, just a Google CBOE Fed Watch tool, right? And I'm going to come over here and I'm just going to do this one live because that was an old screenshot. But so for December, here we are. So markets are not. So last week, this was almost like a 50-50 split. Actually, I can show you exactly. Last week, this was a 50-50 split, 425 to 450 and 450 to 475, which was, this would be a 75 basis point hike and this would be a 50 basis point hike. And right now, 2-day live, yeah, we are looking heavily leaning towards the 50 basis point hike. And that is mostly due to CPI. So why do I say it's like super important to look at tomorrow? Well, there's this. So tomorrow we get this PPI, producer price index, right? And that's the one. So if CPI is consumer price index, PPI is producer price index, if we get any extra inflation showing up tomorrow in the producer's inflation index, okay, all bets are off. I'm pretty positive this whole market will flip right back to where it came from and we'll start chopping right back down into that 375 level, believe it or not. On the other hand, if PPI comes in cool, we could see that 420, 415 level really fast. So today, I'm not going to have any major swings on. Today, I want to be very cautious of how much exposure I'm putting in the market and definitely how much exposure am I holding overnight, right? So this is going to be the biggest of the week. So I'm going to stay light right now. After we get this number tomorrow morning, then I'm going to start positioning for the week and we'll be good to go. And we'll have a clean direction because really there's not a whole lot left ahead of us this week that can actually stop whatever direction comes of tomorrow's number. So that said, retail sales on Wednesday, housing stats. Remember housing stats, existing home sales. We're just talking about what's the most beaten down sector, home builders, right? Not doing great today, but again, if there was one to shoot off the bottom, this is definitely one to watch, right? Retail sales, very good thing to watch for Black Friday coming in. Amazon used to be like this layup trade for Amazon Prime Day. Not so much this year. And again, we've had a lot of stuff kind of going on. So we'll see. But here's the Santa Claus rally, right? And again, I know a lot of people are gonna be like, dude, you're way freaking early. It's not even Thanksgiving. I know, I get it, right? And most people like, hey, look, this is the Santa Claus rally December. But guess what? This is where we are in November, right? Does it really start over here? Well, yeah, this is when we really need to start thinking, do we need to flip the script? Can we take advantage of this seasonal trend? We're going to know in the next week or two, right? It doesn't mean that, you need to put your bear whatever away. That's fine. You can have longer dated puts and stuff like that and shorter dated calls. I'm not going to tell you how to trade, but a lot of people do that. It is a thing. Right now, what I can say is that this seasonal effect is going to have, it's going to make a difference for options for sure. So one thing to note, like we were talking about, kind of like premium collection spreads, things like that. Just be aware, as I'm looking at these indices, we kind of look like we're stuck right now. And so do I want to be taking any major directional trades? No, not yet, right? And can we stay stuck for this entire week? You betcha, right? And especially if, having last Thursday, having had the biggest day of the year, I'm not expecting a big move this week. So overall, this week, if you're new to trading and you're thinking about your position sizing, and maybe you have great trades, but you're still not making money, it's about position sizing. So this week, not necessarily a big week to be positioned. Tuesday, we'll get the biggest number of the week, right? That's going to give the direction for the rest of the week. But again, stay very light until then. And if you're trying to press upside bets for quite a bit, we just had the biggest day of the year. Just had the biggest day of the year. So what happens when we have big moves like that? The rule of thumb for me and my crew knows this. It's like whenever an underline or a market moves the average length of a week within a 24 to 36 hour time frame, it's got to take a step back and it's got to breathe, right? So right now is more likely, where you want to be in. Call credit spreads, right? So this is Nick, right? Call credit spreads for sure. Good place to be doing that, right? I know the VIX is low, but here's the thing about the VIX. The VIX it's not gonna pop to this 35. I've heard so many people, this is kind of a rant, but I've heard so many people be like, oh, the VIX is being manipulated, blah, blah, blah. Dude, it's not being manipulated. It's just how it works. The VIX is like standard deviation of the indices, right? Why do you think that the VIX would be at 40 or 45 right now when we've literally been in this exact range on SPY for how long, right? How long has this range been? Right? This is like 180 something days that we've been trading in the same level. The VIX should be at 10, like to me, right? But until we're breaking either new highs or new lows, right? The VIX isn't going to break out. It's just not going to happen. So all that stuff, just chill out, guys. Like, no, it's not being manipulated. If the VIX is declining, just know your premiums are also declining, right? So again, put credit spreads also not so bad, right? Call credit spreads definitely not so bad. We're coming up on a 200-day moving average on SPY at 407, just over 407. It's going to be a pretty key level. And I know everybody's got these two, one here, fair value gap here at 412, and we got a fair value gap right about here, low volume fair value gap at 417. So this right here, that's that critical level. Where do we break down from? Right up here. So if we're going to run into overhead resistance, it's going to be right around here. So just be aware. It's still a little bit to go. Nothing crazy. What is this? This is about, what is that? 5% to the upside, maybe, give or take, to take us to the top of this kind of broad information from earlier. So we'll see. All right. So that said, yes, Santa Claus rally. It does exist. If we get it, it's going to be right about now. And what does it look like? It looks like this. So it looks like technically, yes, the last 5 days of the year, but October, November, December, this is what we're looking at, right? 1, 2, 3, 4, 5. It's about that 5%, right? So, could it take us to that 420 level? It technically could. So be cautious if you're trying to load up on puts right now. You know, just scale in, maybe stay light, and wait for a real trigger, because right now you're trading against the trend, if you will. We talked about Black Friday. We talked about home builders. And the next one to look at right now is like the winter kind of season is, if you guys didn't see this, UNG, right? Nat gas, that had a big day today. But it's kind of been chopping, right? So this is what I'm definitely going to be watching right now. Still kind of stuck in this range, right? Hasn't really broken out, but typically around wintertime, this fund, UNG, or just anything like nat gas related, likes to have a little bit of a breakout, or at least there's a little fundamental catalyst behind it. What's Nick saying here? SPY low volume between 400 410 can press through quickly when it's ready. Yeah. I think that's definitely. You are super active, man. Nat gas, UNG, Boyle. Yeah, Boyle is a 3x leverage, I believe. UNG, or it's a leverage UNG for sure. And I mean, this thing here, I'll just show you. So why does he like this chart? I mean, if this does rally, this thing has a tendency to really just like take off to like the hundreds. This is, and it's right around that same kind of like level where it likes to do it, right? So let's see, March, July, so September here. We'll see how it goes. No trigger, no trade, right? So right now, no trade yet. All right. Yeah, violent moves. It'll pop up and you'll be like, oh, I missed it. And then, boom, 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 continues on. So I'm just going to hop into the calendar right now. Not a whole lot today. Let's see. Did we get, so consumer inflation numbers actually came in at, so the actual here on the consumer inflation numbers was 5.9 versus 5.3 expected. That came in just a couple minutes ago. Let me see. Did it affect the markets at all? I don't think I saw anything. I'll just go. I mean, literally just now came in. So you got this little wick, right? We're having a hard time getting past. This is a like sideways, hella choppy market. Look at 398. It's gonna battle this. It'll probably pull back a little bit, and we'll see how it goes from there. So on the charts, though, I'm just gonna do this while I flip back and forth. So typically, I'll take a 30-minute chart on whatever I'm looking at, just for I get a wider view and I can see the candles, right? So I want to see when I'm looking at candles, I'm looking for the big giant candles like this, right? Where did buyers really step in? And at what point did they just be like, oh, this is happening and this is happening right now? So 375, obvious, like massive support on SPY. But we have this kind of follow through right in the morning. And I'm going to take, where did they defend it that day? I'm actually going to take this level. Let's see, right here, 388.97. And I just drew a horizontal line straight across, right? So to me, 388, yeah. So this was another CPI. This was a point of failure here. This is the top of the consolidation support. Oh, yeah. So 388, you guys on SPY, 388.90, give or take, is going to be a massive level. As long as SPY can stay above that, I think sure we could take that leg to the upside, right? What would that look like from a fib retracement? I'm just going to measure this really quick. Yeah, not quite 50%. Yeah, nothing to write home about there. Look, as long as SPY stays over 388, I could say we would likely chop to the upside on this kind of rally, right? So to the downside, this orange box again, it's an average weekly range, right? So did we move almost? God, is that two? I would say like 2 weeks in a single day, almost. Ooh, crazy. And this blue line, that's the VWAP, anchored VWAP from the COVID lows. So I like in this kind of area right here, if I do get a shot to go long, somewhere in here, 390 to 385, that's where I'm going to be looking at for a bounce. If I get it this week. Don't know if I will. We'll see. In the interim, everything's pretty much just going to be intraday kind of trading, right? Can't really take this long until this is above 399. An average week's range from this open would be what? Would take us to, really? Does it take us to 410 right at that 200-day moving average? There's so many stocks right now just kind of like climbing up towards their 200 moving day average, 200-day moving average, sorry, and just like shooting straight through those. So I would be cautious. I could see this just like booming and hitting boom, boom, two of these, and then I don't want to say it, but it could be like a quick reversal too. So could we extend over an average week's range? Yeah, you betcha. But when this happens, we likely end somewhere inside of it. So it looks like yeah, we could extend, right, and then end somewhere like this if we do get an upside move. And my guess is it'll most likely be tomorrow. So if we get it, so we'll see. If not, yeah, likely chop into this kind of lower level, and we have that fair value gap at 375. Big ranges right now. Major big ranges. So again, so tomorrow, that's today. Tomorrow that's basically at PPI month over month. Consensus is 0.4%, and so that is what the previous is. Basically, market is expecting exactly flatline, right? They're actually pricing in, right? Once we saw that CBOE Fed tool, they're pricing in that it's going to come in cool already. So some of this is priced in now, just looking at this. So be aware if this comes in at like 0.6 month over month tomorrow morning pre-market. By the way, these times are Pacific, so if you're not on the West Coast, you have to adjust for your time zone. So sorry. 6:30 in the morning, that's when the market opens. So it's going to happen. It's going to happen fast and furious. Unfortunately, a lot of it's going to happen in the pre-market. Typically when you get these gappy days, a lot of people like to sit out just because volatility gets a little funky, which it does. And you just have to pick your spot really carefully. Doesn't mean you don't have to trade it, but if you're not good at playing gap days, then maybe just kind of hang out for a little bit and see how it goes. So that said, whoa, Wednesday, did not do this? I did not. My bad. We'll just take a look at the actual calendar. So PPI, month over month, previous consensus. So consensus is the number that matters, right? So when we're looking at these things right here, and maybe if I can zoom in just a little bit, there you go. So when we're looking at these economic calendars, so the consensus number is what the market is pricing in right now, right? The previous number doesn't really matter that much. What matters is how far away from the consensus that we actually come in at, right? So month over month, so core. So we have headline, which is here, and we have core one more time. So core means not including gas, food, those kind of things, the stuff that we actually use on a regular basis. They're also expecting that to come in exactly in line to previous, and that is the consensus. So again, if this month over month comes in, the core PPI somewhere around 0.6 on either one of those, 0.5, expect a choppy, nasty looking kind of market. But if it's any lower, 0.2, on either one of these, yeah, we could be rocketing to the upside. So super cautious. That's pretty much it. There was, retail sales coming in for Wednesday, not much, right? 1% consensus. This is in anticipation. Like, did we pull forward any spending? We'll see. Import export stuff, not really going to be a big deal. We've never been a net exporter, so don't expect that to ever really. I've never seen it. And then I think so. Housing starts. So we'll have Thursday housing numbers. So housing and building permits. Housing starts versus building permits. Building permits are more like commercial. Housing starts, residential stuff. Are they building? We'll see. Jobless claims is going to be a nothing burger. It's been a nothing burger. There's one thing that I was thinking about over the weekend, and that's, we've got, I saw another headline this morning, Amazon laying off 10,000 people. Twitter, Elon laid off half of his workforce, right? And Zuckerberg gets applauded for, massive layoffs also. So what does that do to our jobless claims? Well, I mean, we know Zuckerberg gave him like a 16-month severance? Nice. Huh. But if the job market is going down, right? Like if it's weaker, meaning like there's more, people that are unemployed, that would also pull back spending, which would be good for inflation. And we're seeing a lot of that happen in the white collar like sections of the economy. So, yes, well, inflation's going up. Inflation's still crazy high. I don't know if it's going up, but it's still crazy high. We're seeing a lot of these things happen in the market that we were looking for quite a while. And it's kind of like that precursor, right? What's the spark that's going to ignite this Santa Claus rally that we might possibly have? It was clearly CPI. The follow through will be PPI. And if this stuff comes in, let's see, we were next export last. Recession? No, not a recession. All right. But if the job market slows, right, spending's going to slow. And so we'll see, right? Like that could be more, fuel for the fire if it's going to continue to fall through to the upside. So be very, very, very cautious. Continuing claims. Yeah. Again, nothing burger. A lot of Fed speeches. And I think we have one more. That's it, really. Existing home sales for October. We'll see. Look at this. Came in at 4.7. Consensus 4.3. So consensus slowing, but nothing major. Yeah. That's pretty much it. So like there's not a whole lot on the radar here except for tomorrow. So whatever happens tomorrow, to me, that's likely gonna really just lead us into the rest of the week. So, and this CBOE Fed watch group, this thing, the market, I'm looking at this, I'm thinking right now, man, they're already pricing in 50 basis point. We're going to get another CPI in between this December meeting, I believe. And do we get another one? I don't know. I don't want to speak too quickly. I believe we do. But if we get another data point in between now and the next FOMC meeting, yeah, it's going to be wild. Let's see. I'm just going to take a list. So December, we get a non-farm payrolls, obviously. So FOMC, yeah, we do. So FOMC decision for the next December rate is not until December 14th. Look at that. On the 13th, we get another CPI. Good night. That's crazy. All right. And then we'll have personal spending and personal income, which will also be definitely on the radar for sure. Cool. So that's that there. I think we could take a look at the rest. So you guys, if you have any takers, throw them in the chat right now, and I'll take a look at them. Otherwise, I know we want to take a look at some of these other things. So while the SPY and other indices seem to be climbing higher slowly today, just kind of grinding up to the upside, I think that's, it's going to be tradable. Is the volume going to be there? We'll see. Or come on, see Apple. Okay, we're in. Tommy, Disney, Coin, PayPal. Interesting. All right. I'll take a look at all of those. So don't forget, you guys, the Dixie DXY, most important chart in the market still, right? We're coming in on its 200-day right at 104. This is clearly kind of turned down, right? So if this does start flying on us at any point in time, you want to have this on your radar. Right now, man, this 110 level here, that was a massive level. It's become like a fair value gap right here. So just be aware. That is a thing right now. Why is that not showing up right? Anyways, let me take this right here. All right, so fair value gap there. And then we had this prior support I'm going to pull this back just a little bit more to the daily. Looking like support was here, right on 107, broken. So if we get to this level right here, 104.70, check this out. This is going to be major point of contention. So if you're long, I'd probably pause right about here on the Dixie, throw a little alert right when it comes. It's likely going to bounce, might have a little pullback, but will it hold? We don't know. So this is going to be definitely one to watch. Cool. The next one too, I definitely want to show this to you guys. Gold, GLD. So this had a little bit of an X factor going on with the crypto blow up. But here's the deal here. So GLD is like, this could be I don't want to say it, but like a commodity super cycle setup that we're going into right now. So here's a weekly chart. This goes all the way back to 2011 of August. I mean, if you're a patterns trader, you can clearly see this is a massive, massive cup and handle setup. And we just hit right there, 153 level. Oops. Get this out of here. Which was really right there. Goodness. This whole bottom of this consolidation here from earlier. I mean, way earlier, right? And that's exactly where it broke down. That's exactly where it bounced, broke this little downtrend. And this could be, I mean, this could be a major buy. So we'll see. So I still have gold miners. This is GLD, the asset, though, the ETF that tracks the gold asset. It's not like AU USD. Sorry, I'm not a Forex guy. But anyways, we can just do this, right? Gold itself, similar kind of setup. Just be cautious, right? We're coming up on this 200-day. I think this has been a big move, right? I wouldn't be surprised to see this kind of stall out right now, which is fine. But if our crypto friends are not recovering, there could be this flight to what's the next safety asset, and it would be gold. So I mean, right around this 200-day moving average on gold, like 1,850-ish an ounce. I think she should stall out and give it a little break and see what happens next. So that's my view there. One Lambo measured move. Yeah, if it was a measured move, yeah, it would be intense, right? I'm not going to do that though. So let's go over to the list. You guys had some others. So I'm just going to load a quick. So it's going to be this guy right here. This is my general analysis view. So 15-minute on the top, weekly on the bottom left, daily in the middle, and hourly on the bottom right. So we had Disney. So Disney, I believe, is kind of bouncing, right? So Disney has this fair value gap from earnings, 99.50. That's going to be massive support or massive resistance. We bounced into this big old, and I've had this green box on my chart forever. This was that $78 kind of bottom, right? 78 here. That's the floor on Disney, 78.75. So risk reward wise, if you got in on that earnings flush around 86, it's a good risk reward. We've been seeing this a lot, right? We saw this, it's funny. We saw this with Netflix. We saw it with Facebook, where you have this horrible earnings reaction. It flushes, and it flushes for like a day and a half, maybe 3 days. And then all of a sudden you get this massive return, right? Like, what's going on? So interesting kind of pattern emerging for sure. Technically, this is a higher low. So as long as 85 stays in, that's the bottom right now for Disney. And your supply is below 90. So that said, you do have this little gap. I think if you're trading short term, yeah, I mean, you might be able to trade to this 99. Maybe not quite 99. I would go to this 98 and change. But expect some overhead resistance right around there. So you could get it. This is a nice day trade for sure. If you get another high on the day up to 98, if it does clear this 98 and then it clears 100, then you're right back on track to that 115, 110-ish level. So this should be 106 first, and then up to 115 and a little bit higher from there. Decent one. If this wasn't a lower high right now or a lower low in the short term, I would be all over it. But because it is, I'm still more cautious of this taking the next leg down. But again, around that 75, 80 level, that's going to be like a value add area for me, for sure. At least until it gets above its, $100 psychological level. Oh, you guys are all over it. Coin. So coin, super interesting one. So I had a day trade on coin the other day, and I'll show you why. So in my mind, I was thinking, look, all this FTX shenanigans could potentially be bullish for Coinbase, right? I don't know if you guys saw, there was like, CEO of, I think it was crypto.com and some others like put out this research of like, here's my assets that back everything. And dude, if you looked at it, it's like, they're all shit coins. And I'm like, what? This is no collateral. But Coinbase would be one where I would say, look, Coinbase is like 75% of their volume is institutional volume. They're not going to be messing around, right? So Coinbase, while it would be a tricky trade, no question. The first level I took was right here. It was this 45. And I thought, to me, I thought, hey, look, an entry around this 45 level, sub 50, was somewhat attractive from a risk reward, because if the floor falls out, you would know pretty much immediately. And I took the shot, and dude, it crushed it, right? But the shot was here. So here's your low, higher low, right? Here's your high, broke structure. So then I was looking for what's the low right before the lowest low. And it was right here at 46. And so that's why I took my shot that morning right there at 46. And lo and behold, the freaking thing exploded in my face. Wish I could have gotten out to the servers a little faster, because that was like a $50 entry, but I digress. So now it's continuing. It's not broken this level right here, but what would be the next low would actually be right about where we're sitting, 52.58 right now. I don't think these two pivots are really going to come into play. I think this one, 47, mostly came into play, and it really, at most, if you get a shot around here, what is that, 49, maybe, if this 52 level does not hold. So I'd be looking actually for a bounce right around here, which it held this morning. The thing about this is you got to watch crypto. And so crypto is not having a good time right now. I would say, in my opinion, the crypto market, I think that there's, having been in the crypto space for a long, long time, there are a lot of people that have staked tokens. Whether or not you have shit coins or you have like utility tokens, things like that, doesn't really matter to me. To me, it's like, look, if you had anything staked, sometimes it's a process to unstake your assets, and that could be like a week sometimes, depending on what it is. So I think that there's more to come on this crypto fallout, just because there's, number one, still too many questions out there, and number two, I think a lot of people still have staked assets that are waiting to be released and then sold. So if you guys understand that space at all, I wouldn't be dipping my foot in just yet. There are no circuit breakers in crypto. What you do though is you throw some really wild low bid orders out there, and it'd probably be sub 10K. I hate to say it, right? Like if it was going to be a flusher, right? Like it'd be right around that 10K, maybe even down to 65. If you get to 65, it's a buy, right, on Bitcoin. That would be 67.33. I'll buy it. I haven't bought Bitcoin in forever, but I'll buy it. What would be on Ethereum? On Ethereum, it would be, so again, it's like, what's the low? You guys are gonna think I'm crazy. So if the low is here, 76, really? No, that hit. Oh God, I don't want to say that out loud. It's like 350. It's like 350 on ETH. It is what it is, you know. But yeah, I'd be a buyer at 350. Who wouldn't be? We'll see. He says no way, dude. Trust me, I've seen it so many times. Like I was here, I was in like heavy 1400, drew down to $76. Right? Yeah, I was there. I mean, really. And I remember staying up in the middle of the night trying to get this 120 order in. Um, yeah, before it like went haywall or haywire somewhere in here. Like this was like 3 a.m. I remember. But yeah, there's no, this completely market dependent, right? Anything can really happen. I don't want to mess with no utility tokens whatsoever. For me, only, not to be a nerd, hyperscale layer 1. That's it. So that said, Coinbase, hopefully this starts to decouple from the price of Bitcoin itself. I think that's been the biggest challenge on something like this. To me, Bitcoin doesn't necessarily have to, Coinbase doesn't necessarily have to track the trading of Bitcoin, the asset itself. But that said, if a lot of people are pulling money out of the cryptoverse, it's not going to be good for Coinbase either. So it'd be a very speculative bet. But I'd be looking for that bounce at around 52 up to 58. And hey, if you guys know the levels, if we do get to this, for whatever reason, if we do get to this 62 level, right here is where it is, 62, 63, Coinbase loves to explode right around that level. So 62 right here, everybody hops in. 62 hops in, right? 62 hops in, 62 hops in, right? So expect that 100% to be massive resistance. For whatever reason, if we do get above that, that could be cool. But until then, probably play for the bounce 55 to 62, something like that. Cool. Carlos, what's up, man? Yes. All right. So where we go? Look, I gotta hop in here. I'm gonna pop through. I know I saw PayPal. So PayPal, again, same kind of thing, man. This flush or on the earnings, and then look at this. So this is where I get a little questioning, right? Like the typical sign of a bottom is bad earnings, good price action. But we're getting this kind of like mixed setup where it's like it's bad earnings. Although this doesn't look horrible. I don't go into it, so I don't know the outlook or anything like that. But it's an initial knee-jerk bad reaction and then quickly bought up. So I feel like this could be some of that kind of like bad earnings, good price action setups, which would signal a bottom, right? Right now, you're clearly battling this $90 level. Oh God, PayPal's really at $90 that fast. Good night. So here's the level, right? So if this was the last high, it's this kind of 85 level to defend. Right now, around their 200 days. So these red lines on my charts are 200-day moving averages. Stocks like to shoot straight past these. So this is a weird setup where tomorrow CPI is going to be major. I'll just show you guys one. Pfizer, if you didn't catch this morning, I know some of our buddies that I know, I got a bunch of DMs like in the pre, like, dude, check this chart out, right? Massive consolidation, 1, 2, 3, 4, 5, 6 days in a row, right? That's what you're looking for. You'd opening above this like top end in the pre, and it just exploded, boom, where? Right to that 200-day moving average. So when something's approaching this level, these are like magnets, right? Can it actually exceed through this? Yeah, it really could. We've seen that so many times on so many different underlines, and it typically does this. You'll see a little stutter step. It could make another one, right? Stutter step here, and then it comes back to it. But this could be like 2 weeks, right? So remember, options timing is everything. Put this on your radar, though, by the way, if it's not on it already. It should be. Massive breakout here. Huge consolidation. This is kind of what we're looking for. So we did Disney, Coin, PayPal. Orca's wanting Apple. All right, Orca is up with the Apple request. So Apple, we got a couple different levels, very similar. So blue lines on the charts, if you can't see them, those are 50-day moving averages. Hopefully you can. I'm going to try and make this as clean as possible. If we do get a pullback, here are your fair value gaps, 135. You don't want to see a pullback below 142 on Apple. That's what you don't want to do. For now, I'm actually looking here. So you have this fair value gap, 154, believe it or not, right at your 200-day moving average. You could easily continue up off that. So you have 50-day and 20-day, you really probably can't see. It's like this little gray line below it. So the 20-day looks like it's about to cross over. Not that I'm moving average, guys. I'm really not. It's just these are larger levels that people watch in general for dynamic support resistance. But fair value gap up to 155, call it 154. It just looks clean, like it should pop to there. Not ready to go short on this. Not really until it's below 145. I can't go short. So there's your setup. Above 149, call it above 150, you should go straight to 154. That could be a nice setup for a day trade, actually. I don't know that I want to swing anything around that. Cool. Boss is asking for a snap. I'm scared to look at this chart. So snap, yeah. $10 was a critical level for sure on snap. Here's the two like X factors for both Snap and Meta, by the way. Snap has clearly not recovered like Meta, and that was a massive recovery. Looks like it has more legs up to like 125. Geez. But Snap looks like it's just beginning. So from an options perspective, I'll take a look at this. I don't know. It's such an inexpensive stock that options are a little funky with it. I mean, 118, you break 118, you have a fair value gap to 112.50. So that would be a $12 call right to here. That's a this week target for sure, right? And that would be above, right? You want to see a break, hold, a break, retest, and hold above like 118 or 1118. Sorry. You have this 12 something in the way, so be kind of cautious. Yeah, and over 1250. Oh, you got a big one. So this is hopium. There's no way around that for 16. If I'm just gonna look at this, 46,000 calls to 35,000 puts. It's not really screaming anything at me. Yeah, and they're really not going any larger than those $12 calls. So November 18th, $12 calls. That's where most of the volume is going to be. 12 to 1250. 1250 is the 12s. Sorry, going out mostly about a quarter, about $25, which is what they're trading at right now. So, I mean, it looks okay. Could you get it? Sure. Momentum's there. At least it's holding. You just need that volume confirmation, which you don't really have yet. So I would wait till at least above 1155. Really? Yeah, 1155, 58, give or take. You want to see that go. 1170, you're very likely to hit it. And that'd be a $12 call for November monthly. COP, don't give me a penny stock. If there's a penny stock, I swear. ConocoPhillips. So oil, definitely not a penny stock. Here's what I'm going to do. I'm going to check the option chain first. That's what I'm doing. Looking at the volume, mostly on December 130s. Interestingly, in the money. Well, at the money now. So they were coming out this morning. December 130s, 876 volume. I don't know if they were selling those or buying them. Not a whole lot of other. This has got to be a swing trade, I believe. Short dated volumes, okay. Honestly, oil, dude, I would look at so like oil has been a tough trader, no question, right? Up, down, up, down, up, down, up, down. And that's gonna really track this sector. I think oil kind of goes sideways for a while. That's my gut. Um, so this level has hit, right? It's like here. So this order block's done. So you need to look at what's the next order block. Probably going to be somewhere around here. So we're charting kind of like live. So if this is a lower high, I mean a higher low, and that would be right there at what is this? 85.48 on oil futures. You're probably okay to go higher, at least just to fill this fair value gap though. Which is only 87. So what I'd say on this is like, here's your big consolidation high, 89. So unless oil, and honestly, I think oil chops in this range, right? For like the rest of the year, or at least until something major happens. But this is just the trading range for oil right now. Does that mean that ConocoPhillips has to do the same thing? No, not necessarily. High and tight for sure. But not making new highs. That's what I'm seeing. So if this is your low, right? I don't have one for that. Low, lower high, lower low, double top, lower high. I don't think this is a long. At least not unless it's holding strong above 135. For right now, this doesn't look long to me. This looks like if it was going to be something, sure, maybe it could be like your little cup and handle setup, but that means that you're going to come back down first, right? And then do something like that. Right, bad artist, bad artiste. So yeah, I would steer clear until you're holding well above that 135 level, and then look at those Decembers. NEM, same thing. So NEM gold, I think, is gonna stall for a little bit. Huge moves on NEM, right? What are we talking here? We're talking like 30% in a week. Yeah, 25% in 10 days. Can it stall? Yes, it can. Does it look like it's going to? Well, it is for the last like 3 days. But if we get the next press, it's going to be a doozy. So $60, give or take 58. Here, realistically 51. So we might get a quick press to the upside on this guy. To about 51. I would really, really cautiously watch how it acts around that level. Right, here's the thing. So this is our prior support, which will be resistance right around 55. 52.30. So around here, sure, I think it can bounce. Absolutely. That's the point where I'm really looking to sell some like calls against it. But until then, this is the same setup. I'm happy to patiently wait on equity here, collecting a nice juicy 5% dividend. Yep, you heard it here first. This is a great like cash flow king, probably best of breed in its sector. In terms of that. Let's see, what was I doing? Where is this going? Let me just do this. 1, 2. Something like that. Man, I don't have the lines on this chart. Anyways, so it is a broadening range. However you got to draw it, that's fine. Daily still looks like it's squeezing to the upside. Give it a sec to breathe, though, and it's going to take another move shortly. That's where we are on that. 75, 76. What are we talking about? Starbucks. SBUX. Starbucks was good, right? Yeah. So purple lines, 200 week moving average. This one's strong. Holy what? 98. God, this thing's all the way back here already. Okay. This one's got some Momo. 93. Is that prior breakout level? Man, it's stalling out right now. But at that 99, that's going to be like psychological resistance. If you do get to 100, you're going to battle this 104 first, and then it's 110. But until then, 104 would be my highest upside target at most. As long as it can hold 96. There's so it's got to hold 96. Breakouts at 98.50 or 90, 99 up to 103.50. About 104. Oh my goodness, you guys, what time is it? 10 o'clock. I think we're good. Do I have one more? USO. Yeah. Okay. XOM Ace is gonna snap. Okay. I'll get you XOM. XOM, I like this chart, right? So how do you not like this chart? So, that's not Ace. Jeez. Hey, by the way, Ace, this is how you find cool new stocks. Somebody, Action Construction. Good night. I've never seen this stock before. Sorry. Yeah. Construction companies. Interesting. Good call. $38 billion market cap. I don't know this company. We're going to have to put that one on the table, table that, and check that out later. That's a nice looking chart. That's how you find cool stuff. XOM. Ooh. XOM topping out. So I had this kind of like channel up. XOM cannot take new. Cannot take a new position. And if you're in an existing position, this is where you want to sell some covered calls. Like lower delta cover calls. 115, that was like my kind of like max value or like my target price. 110 was actually my target price on XON. Here's my concern with this guy, and this is the daily chart. When you have these trend lines, so number one, trend lines like the my old mentor always said, like the deeper the angle, the steeper the angle, the lower the strength of the rally, right? So this angle's gotten pretty steep, and I don't necessarily take it, my guys know, I don't take it on the break of, right, the trend line. I take it on the rejection of, and then to here, and that's where we're going. So for right now, this is actually going to become a short at 112.50, which we did not break today. We're holding. I'm going to pull this down just a little bit because I do want to be a little bit safer. So 112. Let me go back to my 30-minute. Yeah, you got some pretty clean gaps. So below, I guess it is 112.50. Below 112.50, you have a gap to fill at 110. That's a quick either overnight trade or what have you. This is one that looks like you definitely want to be selling covered calls on. But it's not a new long until it's holding 115. Is it a channel? Yeah, it's still in the channel. So, I mean, you're okay. Ah, you're kind of rejecting out the bottom of it. Mm. Look, if there is a rotation that goes down into tech or retail or whatever, you guys got to think of where's most of the money been made right now this year. It's been made in oil and oil services, to be honest, and some of my favorite stocks. But they're going to be the ATM machines for a lot of people. As horrible and awful as it sounds, it's just what you got to understand. There will be some profit taking, no question. So, the only question is whether or not you're going to beat them to that. Not a bull here, not a bear here at all, but um, it's just like a prudent thing to do. Like 35% in a month and a half. That's a nice bounce, nice rally. We don't think it's going to be. Don't think that stocks just go up forever. They do kind of consolidate. So take another look if you get around that 105 level, but expect it to pull back to at least that for right now. Ah, that's a sad one. Does CVX look the same? CVX gaining momentum. All right. Well, Exxon was the leader. Now CVX has got the juju. So I guess this is, if there was one thing to be, good about the sector, there you have it. XLE, the sector. New high. Yeah. If it breaks out, as long as this sector holds probably 92, I'll be happy. 88 really is fine. We'll see. Cool. Bought an 85-foot X for January expiration. I hope it wasn't based on what I said just now. So that I mean, 85, you're talking about a full-blown breakdown. Might be a little aggressive. Here's what I'd say. If you want to take a quick measured move, I don't think it's going below its 200-day, right? That would put it about just around 100, which would be your real psychological kind of support. So $100 would be a real price target there. At most. So just careful your momentum. Could be good, if you get that first momentum move. Yeah, I saw BMY, nice bounce back. Yeah, nice. If I had my console, they probably wouldn't be valid anymore. UNH a little bit of bounce back. I trimmed a little bit of what I added. I think UNH should come down a little bit more also, by the way. I'm going to be looking really at this 465 level for big, nice ads. I just started adding last Friday at like 510. So sub 500, I'm a buyer for sure. Which will stop on options? Good question. So what's my usual stop on options is actually like 50%. Depends on what kind of stuff you're looking at. So if it's a swing trade, it's got to be at least 50% because you'll have these gaps overnight that you cannot anticipate. Economic events, earnings, things like that, earnings on their peers that, maybe you didn't see coming. Stops are hard on swings. So again, if you're swinging options, those are actually lighter allocation. Buying more time does not mean safer. I know a lot of people think that. Go to the YouTube channel, Paper Gains on YouTube. It's the first video you'll see is day trading options. Really good explanation on how that actually works. Good. BCU, yes, Crankfest. Huge morning this morning. This guy, nice consolidation. If I were to take heating energy type play, BTU, this is coal miner, right? Coal is like it's crazy highs, but yeah, not clean energy. I don't know. I haven't stayed up with this company to know if it's clean energy or not anymore, but technically it's coal. But this is a very nice looking chart. Yes. DHI is home builders. Yeah, so that would be a good one to watch. Again, this is perfect, right? So this is that sign of bottom, bad earnings, good price action. Bad earnings, good price action. That's typically the sign of a bottom is in. So a lot of this kind of stuff I've been watching for sure. This is a nice looking chart. You got a gap to fill here around 78. My guys, no, we would typically go something like this. We're going to wait for a pullback, right? This kind of happened. So you get this break of structure or trend. It's not really structure. So this downtrend, and you want to see it break first, and then you kind of trace back to that last low. So this was your entry long here, bouncing up. At this point, give it a sec to breathe. If it bounces up off 82, it goes parabolic. Weird for a home builder. And just holds. But there is that gap to fill, 78. You guys want to see my home builder? NVR. Just bouncing off its 200. Ooh, is it ad time? 450, 4,500. So around 4,000 was the ad right here. Or the entry, rather. This one looks like it could explode. Be a nice one to catch. Speculative home builder space, RH. I do have a little bit of this left. I definitely trimmed majority today. We'll see if the next trade comes. This could be a super interesting one with catalysts of Home Depot and Lowe's reporting. So RH has earnings on deck, but they're not until the beginning of December. Between now and then, Home Depot and Lowe's will be the catalyst for this guy. So this isn't necessarily a home builder, but it's more like home restoration, home fixer-upper kind of stuff. I get a profit target really over 330. But this was like an old Wall Street kind of darling stock. And I mean, from 75 to, I mean, that's a 10 bagger just on equity on that last run. Definitely basing here. This is just a retail shop, but 6.7 billion market cap, not horrible. I can't dig really too much into the fundamentals, but definitely a nice spec to keep on watch. Yeah, beautiful consolidation still ongoing. Broke out of that level, so now that 270-ish mark, if you see it hold that 270, that's good for RH. Really good. Looks like it's going to. A little hammer on the day. Ooh. Yeah, first rejection off that 200, totally expected. But a hold around that 272 could be good for a next upside. Yeah, which the next profit target's 330. So we'll see. Could be a good one. We'll take a look. All right, guys, that's it for me. That's it for today. I got a lot of stuff to watch this week. Remember, tomorrow's the biggest day of the week for sure, hands down. It's going to determine the direction for Wednesday, Thursday, Friday, Tuesday. And then Home Depot loans earnings on deck. Cool. Adios.